Hello everyone. Every weekend I put out some videos for TheChartGuys members, and this morning's video I thought I did a good job breaking down how I trade oversold bounces, so figured it's a timely environment to share this with the YouTube world as well. All right, good morning TheChartGuys members. So we're going to go over technical analysis here of our major coins, but first things first, going to talk about bounces and how I play these kinds of bounces. So for me, first things first, if you're trying to play oversold bounces in this kind of environment and you're newer to trading, you're going to lose a lot when you try. You're going to lose a lot of times. The first 10 times, you're going to lose more than half of them probably, which means if you are trying this style and you are new to it, you're using 5% of your capital. And where other traders might have 10% per bullet, and I'll go over what I mean by that in just a minute, maybe you're using 1% per bullet and you're going a maximum of 5% of your account on this kind of trade, because again, you will lose when you are trying this out, just like you will lose when you're trying to trade stock options for the first time. It's the kind of thing where you have to go through experience, you have to learn the lessons, and it's trial and error, and it takes a lot of time. Another disclaimer, there are traders in here who are very experienced traders who don't play these bounces. It's just not their style. They don't like these kinds of trades, and there's nothing wrong with that. You have to know yourself as a trader, and you learn throughout time and throughout experience what kind of trades fit your style, what your edges are. And for some traders, they just skip all of this, and that's perfectly fine as well. For me, it's one of my edges. It was not intentionally developed as an edge. It just over time became clear that I like playing oversold bounces and I do them fairly well. But again, it takes a lot of time. I've done this kind of trade 150 times at this point in my trading career on both stocks and cryptocurrency. So I'm very comfortable with this kind of trade. And again, just to go back, there are members in here from 2017 that have developed this trading style alongside me, and it's now one of their edges. But again, there's the same traders from that time period who just said, "No, this isn't for me." So you don't have to feel like I have to get good at playing oversold bounces. It's nice to be able to play them, but it's not a requirement to be a successful trader. So looking at Bitcoin, just an example, going back in time, trying to find the right example. So back here on the pullback in May, I made more money as a bull in here than I did up here. How does that make sense? Bounces. Because of playing these bounces, and I'm more comfortable and I'm using more capital than I am when we are overextended and feeling euphoric. So for me personally, I'm going to go over my style. I'm going to go over some examples. And at the current point in time, there are two kinds of pullbacks in the cryptocurrency space. The first kind is when you get these kinds of candles. This one and this one. What leads to these kinds of massive, fast drops? The answer is liquidations. Longs get liquidated, and it is coming from a bullish environment. So you have cocky bulls, overconfident bulls that are over-leveraged, and you say you come from a bull environment, and then all of a sudden, oh man, we're real weak. And they all get flushed out and they get liquidated and stops get triggered. And you get a fast, hard drop where you just absolutely dump. And if you go back in time and you look at the percentage drop on, the last 15-minute candle here, and then the V-shaped bounce that follows, it's a lot more powerful because you clear out the order books. When you dump down and stops trigger, and that happens, you literally erase all the bids here and you open that up. So let's just look at this daily candle from, 43 to 30 on the one daily candle. So as soon as you go from 43 to 30, there's now nothing there in that order book. Nothing on the ask as well. New orders get put on the ask as it happens, but that's why you V-shape bounce, because it's so thin at that point in time, because you flush everything else real fast and you V-shape bounce. I like those kind of bounces a lot more significantly, because when you get the V-shape bounce, it's very easy to be comfortably profitable very quickly. And again, the style of bounce that I'm looking for, when I'm looking for a daily oversold bounce, I want to have a core position, and I want that core position to benefit from the daily oversold bounce. So again, back here, went aggressive on the break of 30,000, and at that point we had a lot of shorter term time frames oversold, and then sold partial position and kept a core. So I'm trying to keep a core again. We are in a monthly uptrend, and I am going to be looking for a monthly bounce. Whether or not we hold 28.8 is the question that we're looking at right now. But again, I want a core position until the daily RSI starts to cool off. As soon as the daily RSI starts to cool off, my mindset and my game plan changes, because at that point in time, I know a daily lower high is the most likely scenario. And if we cool off the daily RSI, that increases probabilities for me that we can see another leg down. So on the current trade setup, I am looking for core positions for bounce plays in Ethereum and Mana. Those are the two that I'm choosing. And I have to trade around them. I establish a core that I will hold until the daily RSI starts to cool off. And then around that, I trade and I flip positions to continually lower my cost basis and to get comfortable. And I have a lot more cash than I have position. Again, currently in my mindset, if I have 10% of my account in ETH and 10% in Mana, and I have a good average, and that daily oversold bounce gets going, it's very worthwhile for me. That's fine. Back in the day, I would want to have 80% of my account for those bounces. So again, it determines whether you're looking to be aggressive or conservative, but the only time you're going up to 80% is if you are extremely confident in your abilities to play oversold bounces. Because if you're not and you're going 80%, that means, I started scaling in way too early and I am out of control of this trade. Again, our capital, view it like ammo. It's bullets. So if I'm in two 10% positions, I've got 2 of my 10 bullets used up. And then if I am trading and flipping, I can use up more of that ammo, but the only time that I am all in is if something is terribly wrong, which again, I don't ever want to be all in essentially, or if we are just in absolute extremes. And again, it's that flush where if we drop, if we're already beat up on all time frames, and if right now, if we were to drop on the daily time frame and take out 28.8 and trigger the stops that are based off that level, I would be all in looking for the daily oversold bounce. And yes, that opens yourself up to an anomaly. What if an anomaly 1 in 200 scenario shapes up and we just get absolutely crushed, more so than anybody ever thought possible? Yes, you open yourself up to take a potential big loss. But that anomaly happens infrequently enough that for me and for other traders who trade this style, the wins along the way for the 199 times that it is not, obviously you're not winning every time, but the majority of the time where it's not an anomaly, the gains are worthwhile enough where okay, I have to be cautious because there can be that 1 in a 200 chance where things get insanely extreme and I get into trouble. But if that happens, then, maybe I give back a month maker, but I have multiple month makers, the last 10 oversold bounces that I have traded. And these are all just, I'm just making up numbers and giving examples here. So my style, just as an example for Ethereum, so yesterday started, and again, I didn't even consider getting into a bounce. My aggressiveness playing bounces matches bears. What do I mean by that? I mean, if we're not dumping, then I'm not aggressively scaling in. So I didn't even think of playing an oversold bounce until Bitcoin was daily, 12-hour, 4-hour RSI in the low 20s, and hourly oversold. As soon as that happened, I said, okay, now I'm interested, because I know that in those extremes, I have favorable odds of short-term time frame bounces. Even if it's just an hourly bounce and the 12-hour RSI doesn't cool off, that hourly bounce allows me to maneuver around and position myself. If we're daily oversold, but the hourly RSI is not oversold, I know we can easily see another leg down, so I have to be cautious, and I'm always prepared for another leg down. Every single aspect of my game plan, even right now, I am preparing for Bitcoin to break 30,000 on this drop. I don't think it's the most likely scenario until at least daily RSI cools off on a short-term bounce, but I'm preparing for that to be a scenario. So I'm not going to use up too much of my ammo if we're still above that 30,000 level. So for Ethereum, just as an example, so yesterday I made my initial scale in, and my first scale in was a bit high. My first scale in was in the low 2600s. First scale in, and let's say it was, was that even 10%? Maybe 10%. Yeah, about 10%. So initial core starting position. From there, we saw another leg down. Say, okay, I'm going to make a second entry, knowing that we're extremes on the shorter term time frames, and knowing that once I make my second entry, I'm looking to sell that second position to lower the cost basis of my core. So I had a second fill at 2480s, which was a decent one. And then we bounced significantly. We bounced over $100 from there. So I then sold I forget exactly where, but let's say, so for easy math, let's say 2480 was a fill and 2620 was a fill. So my average is 2550. So then we bounce, I sell half of a position a bit over 2550, and that then drops my cost basis a bit. Let's say it drops it down to 2530. Okay, now my core is 2530, and I got my ammo back. I got my bullet back. I'm in my core. I sold that half flip, and now I'm just patiently waiting. And then we get another leg down. And last night, overnight, I did it again, where on one of these drops, I missed the climax flush. I was sleeping. I did wake up in the middle of the night. I got one here, another scaling entry. But because I missed that climax flush, I am less comfortable than I obviously would be if I got that climax flush. Because if I had a position on that climax flush, easily sell for a 5% bounce, get my ammo back, really in control. But in this scenario, I missed that, so I'm less comfortable. But I got another entry. So let's say average 2530, another entry 2470. So now my average is 2500. On this current bounce that we just saw, because I didn't get a third fill down here to be extremely comfortable, that would have dropped my average. Let's say even if I got filled at 2350, that would have dropped my average down a solid amount, but I didn't get that fill. So my average is still 2500. So I say, okay, I'm not comfortable because I know we have to change the hourly trend. I know consolidation on the hourly is inevitable. And here we are hitting hourly EMA 12, which is a great spot to reject and start hourly consolidation. So I sell half at break even. So sell half at 2500 on this morning bounce, get my bullet back, get my ammo back. So now I'm in a core position with an average of 2500, and I've got a ton of cash to keep doing this as long as the daily stays oversold. So I'm in the red right now in my core position, but the daily bounce also hasn't started at this point. So if we were to see another leg down, again, I've got plenty of cash. So if we drop down to another lower low, if the hourly RSI gets back to oversold, if the 4-hour RSI stays crushed, I'm going to do the same thing. There's two ways that I can play this right now. If I want to be a little bit more aggressive, if I think that this is our weekend bottom in for now, I can make an entry looking for an hourly high or low to reload a position. And then if we confirm an hourly trend change, I can sell half. So again, let's just do rough numbers here. Let's say I get another fill at 2420. So that then drops my average down to 2460. Let's say we confirm the hourly trend change. I sell half at 2560. And my average is now 2360. Just like that, my core average would be right down near our low. Then I would be in complete control of the trade, just waiting for the daily bounce in a very nice core position. If I want to be more conservative, and I'm not sure we're going to set an hourly high or low, and maybe we're going to get another leg down, maybe, I've had a couple losses in a row, and I want to be more conservative so I don't get on a losing streak. Maybe, whatever the reason is, maybe I'm busy today. Maybe I just keep my core, know that it's slightly in the red, and say, okay, I'm keeping my ammo. And if we break 2300, the daily, the 12-hour, the 4-hour will all still be extreme enough that I'll be comfortable making another entry. And again, at no point in this scenario have I gotten even close to using up 50% of my cash in what I'm describing. So haven't decided what I'm going to do yet. I might look for this hourly high or low entry. What I would probably do is look for a spot for that hourly high or low. Maybe it's 5-minute oversold. And then say, okay, if I make an entry and the 5-minute bounce gets going, and I'll say that's either the hourly high or low and I made a good entry, or it's not and I stop out. And maybe, if I make that attempt and maybe my second position then takes a $30 loss because that's not our hourly high or low and we are heading back to the lows. Okay, well, that just knocks my average up from 2500 to 2530 for my core, and it's a step back, but again, I got my ammo back. And getting that ammo back is really important to maintain control. This style of trading takes a ton of babysitting, micromanaging, and activity. When you get the V-shaped bounces, you make your entry, you sell a little bit, you set your stop, and that's it. You don't really have to do a whole lot. But when it's a slow grind down, so I described one style of dump. One style of dump is the liquidations and the massive hard drop. This style of dump, people are getting liquidated, but that's not how we find a bottom. It's not just a flush V-shape. Okay, there's our bottom. Volume climax, very clear. It's not how it plays out. And that's why this 15-minute time frame just kept grinding down. and cools off short-term RSI levels and another leg down, because you're in an environment where we've been bearish, right? So we don't have overconfident longs. We don't have a ton of longs on leverage where a key level breaks and stop losses trigger a waterfall drop. So that's not how we find a bottom. It takes a lot longer to play out and a lot longer to find that bottom. It requires a lot more patience. And it's even different, 2017, the order books were so thin where you would drop 20% and bounce 10% in the span of a few hours. It was insane volatility. We're not in that environment anymore because of market cap increase and more liquidity out there in both directions. But this kind of environment, you need that climax flush, which we did get on the 15-minute time frame. But what keeps us cautious is, well, we saw that and it wasn't the bottom. So again, we just have to be cautious of short-term RSI levels cooling off. Every time I see short-term RSI levels cool off, I anticipate the possibility of another leg down. And right now, the hourly RSI has cooled off. The only thing that's keeping me interested in potentially making some continued entries is the 4-hour, daily, and 12-hour RSI still where they are at. But again, my game plan and my ammo is preserved for the possibility that we break 28.8 thousand. That's the extreme scenario, but it's a possible scenario. That would be max pain. We have the FOMC coming up this coming week. We have the stock market still in free fall, not finding a bottom. These are definitely factors. I wouldn't be surprised if we see bounces that cool off 4-hour RSI levels, maybe even 12-hour RSI levels today and tomorrow. And then we have to be cautious of broader market weakness to start next week, which could then lead to bear flags and fresh lows. That's a part of the game plan preparation as well. So my goal here is to ideally have a position for a daily oversold bounce. And again, I'm still looking, on Ethereum, I'm still scouting for a monthly higher low entry, anything above 1718, which would require another 30% plus drop to the downside. So I'd like to have a core position that I'm comfortable with enough for a daily oversold bounce in the broader stock market and some more meaningful, at least a weekly bounce in the crypto space. So that's my mindset. I do want a position for the longer term bounce, but the bears have complete short-term control, and bears are just waiting for 4-hour lower highs, cool off the 4-hour RSI. They're going to be waiting at EMA resistance. So the bulls have a long road ahead. If they're going to shift momentum, it will happen eventually, but bears have complete short-term control right now, so we have to be protective. And right now we're heading back towards 5-minute oversold conditions. So keeping an eye on the short term. And another style is you don't even have to try and nail the bottom. You wait for the hourly bounce to take place, and now you say, okay, well, I have a clear stop level. If the low for the weekend is in, I put my stop under 34,000, and I make an entry. I'm scaling in now. Maybe I make one entry right now. I got another entry at 34.7. So again, there's so many different styles to play this bounce, but just be aware that bears are waiting on every time frame. Bears are waiting at 4-hour EMA 12. Bears are waiting at the 12-hour EMA 12. And even more patient bears are waiting for the daily lower high. Bears are extremely confident, as they should be. They have complete control. They have a broader market environment that favors their direction.